Hello, my name is Patrick Scholl, and I'm a partner and head of banking and finance of Mayer Brown in Frankfurt. On Wednesday, 24th of June, we held our 6th OTC Derivatives Seminar under the title Managing Crisis and Transition. Due to the corona crisis, we held this seminar this year as a WebEx conference. This year, we offer you the opportunity to watch a recording of our seminar. The speakers during the seminar have been my partners Anna Pinedo from New York, Chris Arnold and Ed Parker from London, and myself, Patrick Scholl. In the second part of the recording, you can watch Anna Pinedo presenting on equity derivatives in the current market environment.
So if we go to the next slide, obviously the pandemic has resulted in incredible dislocation in the markets, significant market volatility, and there's been sort of a bifurcation in terms of how market participants have been reacting, largely based on whether they need to engage in transactions that, well, we'll just stay on the prior slide, whether they need to engage in transactions that have a capital raising component, or whether they are being opportunistic. So I'm going to talk very briefly about a couple of transactions that have become more popular or more common at the market offering programs with equity forwards, which have a capital raising component, convertible note issuances, which again have. So some of you may be less familiar with these types of transactions. We'll go on to the next slide. These have become incredibly, we'll move on to slide 39. At the market offering programs have become incredibly popular in the United States. So the way that this works is an issuer that has a class of equity securities. These can be common shares or preferred shares that are registered with the Securities and Exchange Commission in the United States. Will file with the SEC an offering program to allocate a portion of new issuances to sales that take place at the market. So these are sales that take place from time to time into the public trading flow at prices that are related to the then market price of the securities. So effectively, for those of you who are more familiar with fixed income, this is somewhat similar to a medium-term note program, but is the equity counterpart, essentially, of a medium-term note program. It allows an issuer for a period, say, of a year to issue through a financial intermediary, an investment bank that is acting as the agent for the at-the-market program, to issue shares periodically, which the agent will then sell into the market. So we'll go on to the next slide. What has become increasingly popular, and now we see this based on 2019 data, over 36% of the ATM programs in the United States had a equity forward component. So in this case, the issuer, in addition to entering into the at-the-market program, is entering into a forward sales agreement, sometimes with the same sales agent, sometimes with a different financial intermediary that is agreeing to act as the forward purchaser in the transaction. Now, the shares that may be issuable pursuant to the forward are registered with the SEC, and if you think about the transaction from the perspective of Title VII and how to characterize the forward sale, it's our view that the forward sale should qualify from an exclusion from the swap definitions, so it would not be considered a swap under the product definitions. We go to the next slide. Likewise, the terms that depend on interest rates or borrow costs should not lead one to a different conclusion. If you go to the next slide, you also could take the view that because the forward sale is being entered into by the issuer on its own securities and involves a capital raising element, it qualifies for the exclusion as well from the swap definition. And so it wouldn't be considered a swap, wouldn't be considered a security-based swap. If you go to the next slide, we have just some illustrations of the sales agent structure and how this transaction would work in terms of the issuer, its relationship to the forward purchaser. And what's important here are several things. First, that there's increased appetite for these transactions in the United States. Second, that many of the investment banks in the United States that are active in the at-the-market offering programs may want to bid out the forward component to third parties. And so there are ample opportunities for other participants, in particular for foreign non-U.S. banks, to bid on the forward sale component of these transactions and to act as a forward purchaser in these transactions. We'll go to the next slide. And there you see the forward purchaser from the forward purchaser's perspective. Now, most of these transactions are documented on confirmations, ISDA-style confirmations. The confirmations generally are filed with the SEC as part and parcel of the issuer's capital raising documentations as exhibits to the filing that announces the issuer's entry into the ATM program with the forward component. And generally, the forward purchaser's name may be excluded from the filings. Of course, there are a number of considerations in connection with these transactions, whether these will be physical or cash settled or net stock settled, whether there's available borrow in the transaction in the stock. Generally, most of these ATM transactions are being entered into with respect to the securities of issuers that have a very liquid stock. And what bears mentioning is that during this period, the post-pandemic period, from mid-March, I would say about March 16 through present, we've seen an incredible increase in the number of ATM transactions. Issuers find this an appealing way to raise capital, particularly while there are volatile markets. So we'll move on to the next transaction, stake building transaction. So here, of course, there is no capital raising component whatsoever. We wanted to flag this because we are seeing in the United States an increase in the number of these transactions. And this bears mentioning because a number of private equity funds and opportunistic debt or distressed opportunity funds have been very active in engaging in these transactions where they regard a stock to be under pressure or undervalued and would like to take a significant position and do so indirectly through entering into total return swaps with one or multiple counterparties on the stock. So here, just some quick reminders. In the United States, these types of transactions, even if they're cash settled only, can raise a number of regulatory considerations. There's our antitrust statute, which is referred to on the slide, the Hart-Scott-Rodino Act, HSR threshold, which may be triggered. Likewise, there are SEC reporting requirements, and those reporting requirements relate to ownership positions in excess of either 5% or 10%. We'll go to the next slide. So for purposes of the HSR threshold, you'll see the current antitrust HSR threshold is $94 million for transaction value, and there are a number of exemptions from the HSR filing requirement to the extent that a holder is taking a passive position and a transaction is cash settled only. So that's important to keep in mind. We'll go to the next slide. On the next slide, there are also some jurisdictional elements to consider in terms of where the counterparty is based and some other exemptions from reporting requirements. The HSR analysis ought to be undertaken carefully before one of these transactions is finalized. Likewise, if we move on to the next slide, the ownership reporting thresholds. Now, counterparties may want to include some ownership limits in the confirmations so that there is no trigger for these ownership reporting requirements for Section 16 and Section 13, which are under the Exchange Act in the United States and would require holders that acquire beneficial ownership or control of a securities position to report upon acquisition, and then from time to time, as their position varies, their holdings in a stock. And generally, of course, a counterparty, financial counterparty, is going to want to avoid having to make these ownership filings or having its own positions have to be rolled up or accumulated for purposes of ownership filings. So we'll move on to stay on time. And just a cautionary note, of course, in any confirmation that relates to a stake-building transaction, the counterparty is going to want to be very mindful of ensuring that there are adequate representations for the counterparty's protection regarding the absence on the part of the fund that is acquiring an indirect interest to any inside information. In the United States, we have no statute relating to inside information, so there's no statutory definition of insider trading. All of this is shaped by case law. So if we go on to the next slide, most confirmations have a language that relates to the absence on the fund's part of any material non-public information. So this is similar to the regime in Europe relating to material non-public information, except that in the U.S. we don't have a clear-cut definition. So we'll go on to the next set of slides. So here, the other noteworthy trend as far as capital raising and related equity derivatives transaction is this pretty spectacular increase in the number of convertible debt issuances that we've seen in the post-pandemic period. Almost all of this 2020 year-to-date information relates to transactions since March 16, which makes it all the more astounding. As many of you, I'm sure, are aware, companies that want to raise cash in the United States often do so through the issuance of convertible debt. We go on to the next slide. There are many advantages to raising capital through a convert as opposed to selling equity. It's perceived to be less dilutive. There are tax benefits to it. And of course, with many convertible debt issuances, an issuer may enter into anti-dilutive transactions to offset the dilutive aspect of issuing a convert, and essentially may do so through a call spread or a call and warrant structure. So we'll go on and just, again, a few things that may not be intuitive. In the United States, there are real accounting impacts depending on how a convert, how the settlement options work in a convert. So GAAP sometimes operates in somewhat illogical ways, and there are very different balance sheet impacts to an issuer in the United States that chooses a particular form of settlement. Those impacts are not solely accounting, but if we go on to the next slide, you'll see that these impacts may be quite real and may have an EPS, an earnings per share benefit as well, depending on the approach. So as I mentioned, there's an offset, an anti-dilutive transaction that may be entered into in connection with a convert. And of course, we've seen with the rise in the number of convertible issuances, an increase in demand for call spread overlay transactions. We'll go on to the next page. There's a basic structure, and we'll keep going on to the next, the convertible note plus warrant, the call spread structure. So I'm sure that many are familiar with this approach, which has beneficial tax aspects in the United States and has become in many ways the favored approach. So I want to finish, and we'll skip ahead with share repurchases. We'll go right ahead, and we'll keep going and move on with repurchase transactions. So this, again, is very specific. Quite a number of issuers in the United States have seen their stocks hammered as a result of the market dislocations, and many, of course, would not find it prudent to use cash on hand to effect share repurchases. Nonetheless, for a certain segment of public companies in the United States, it still makes sense to engage in share repurchases, and we continue selectively to see a number of companies enter into share repurchases and either do so directly through open market transactions or in this environment more likely through accelerated share repurchase transactions that, of course, involve a privately negotiated transaction with a dealer counterparty where the dealer acts as the seller of the company's shares. So if we move on, I want to just leave you with a few thoughts on some of the securities law implications in the United States that should be considered or vetted in connection with ASR transactions. We'll go on to the next couple of slides. We'll move on from there, and we'll keep going. So you'll have those slides to reference. So in the United States, a repurchase transaction involves a number of securities law considerations. Section 5 issues in terms of how the dealer's initial sale of the shares to the issuer is handled, but more importantly, the delivery of stock in stock settlement and how those transactions are handled under the U.S. securities laws, whether there are SEC registration provisions that need to be accounted for in any confirmation, and whether the dealer's hedging activity can truly be said to be independent of the issuer's economics and delinked. In addition to Section 5, consideration should also be given to some other aspects of the U.S. securities laws, so we'll move on to Section 9 and Section 10. So here, making sure that there are no manipulative practices in connection with the execution of the share repurchase, the entry into the share repurchase, or the settlement. None of the parties has material non-public information, and transactions are executed in connection with reference to our anti-manipulation rules, which is Rule 10b-18. We'll go on to the next slide. The safe harbor in the United States for repurchases would not be strictly available for ASR transactions. These are available for outright repurchases. Nonetheless, it has become customary for dealers to execute ASR transactions by analogizing to our 10b-18 to avoid claims of market manipulation in the issuer's stock. So that's a very, very quick trip through the equity derivatives transactions that should be most important during this pandemic period. And I'm going to hand it off to Patrick.
Thank you very much, Anna, for giving us these interesting updates on equity derivatives in this exciting times where we are seeing how volatile equity markets are. And this has also an effect on our derivatives transactions. Thank you very much. I see that there's no open question at this point in time, so please send us questions if there are any on your side, and we are happy to answer them.